Welcome to today's morning report with me, Rich Perry, market analyst at Hantec Markets on Thursday the 3rd of September. European trading session started off on a positive footing actually. DAX and FTSE both up 1.5%. Strong rebound actually, nice gains that we're seeing early on, and that's come on the back of a rebound in S&P or Wall Street last night. Helped certainly by the recovery that we saw late in the session on oil. Let me just show you first of all the oil chart. That's just the volatility. First of all, volatility is incredible. We had actually oil stocks, an unexpected build in oil inventories yesterday that dragged oil price lower. 4% it was lower at one stage, and then rebounded sharply into the close, and then about 1.8% up, I think it was. So it's still seeing this huge volatility around oil, and I think oil is driving market sentiment at the moment, and certainly that strong showing on Wall Street has helped Asian markets and subsequently European markets overnight. China's closed for a couple of days of national holidays, so that's probably going to help to support markets and market sentiment. And what we're seeing is, broadly speaking, a bit of consolidation actually. Forex markets. This is the trade-weighted dollar we've got on this chart. 96.3 is a very interesting pivot, I think, on trade-weighted dollar. I think that equates to sort of that pivot band on euro dollar of $1.1050 to $1.11, and we're seeing that rebound that hit that pivot at 96.3 and then fallen over, but still underneath that. VIX volatility, again, VIX volatility is a very strong indicator of markets and market sentiment. VIX volatility, when it's falling, that sort of has a very strong negative correlation to markets. So that would be market positive if the VIX volatility continues to fall. So we'll watch that one with interest, and certainly the oil price going. If the oil price finds support, then yes, the markets will, I think, also be supported by that. We've got all the services PMI data out today, and starting off with the UK. So PMI expected to at 9:30, expected to come out at 57.6. So that would be an improvement on last month. So service sector in the UK remains steady and pretty strong actually. Certainly a big driver of the growth that the UK is finding. Into the afternoon, then we've got the US data, the weekly jobs claims. 275 is the expectation there. You don't certainly at the moment you're not generally getting too much market direction off this weekly jobless claims. It remains fairly steady around these sort of levels. And then you've got the ISM non-manufacturing, which last month spiked strongly higher to 60.3, but it's expected to come back to 58.1 this time around, but still that would be a strong number, and that would also be above the levels it's seen for most of this year and most of the last 12 months as well. So that would be a strong number today. So that could be the driver of market sentiment, with sort of a lack of impact from China today. Now my chart of the day is the DAX. DAX has, just been gapping all over the place, and you generally do say that gaps fill, and they have tended to be an indication for trading on the DAX. And you would also argue though that momentum indicators on this DAX chart are pretty much negatively configured. We had that obviously that sharp sell-off that sent momentum strongly oversold, had the rebound, but the rebound is not doing too much in terms of recovering the momentum, and already we're seeing these momentum indicators rolling over. Stochastics, especially MACD lines, haven't even recovered at all really, despite that sharp rally that we saw last week. And what we're seeing is today has been a strong unwind, which is helping to fill that gap at 10,132, which was left from Monday, and that has just filled that gap. So the question is, are we trading gaps to basically use the filling of the gap as a selling opportunity? Well, at the moment, I think that the momentum is still pretty negative on the DAX. In terms of the hourly momentum, you can see that there has been a slight improvement, with the move today, but I still think that you've got the momentum that's around about the 60 point on the RSI and the hourly chart. MACD lines are fairly sort of neutral, really near term, but I still think that the daily chart momentum would suggest that now you're trading, or you found resistance around that 61.8% fib level. If I zoom out here, 61.8% fib of that December to April rally. That is the resistance overhead, and whilst you're trading below that, you can't really be positive, I think, on this chart. I think you're going to still have to treat these rallies as sort of a chance to sell. You have now filled that gap. You could also argue that there's a gap that needs to be filled from today's open on the hourly chart, so we've gapped up from today, so arguably that also needs to be filled. So now the fact that you've filled this gap down from Monday, you could start to see a bit of selling pressure coming through, but it'll be very interesting to see, because I mean the markets are so volatile at the moment. I still think that oil is a big driver of this chart, of the markets generally, and unless you really saw a move above that 10,382 rally high that we saw last week, I don't think that you're going to see, I don't think you can really take a positive view on the DAX yet, because I still think that it's trying to weigh up what exactly the fallout from all this market turmoil in the last few weeks has been all about. And I think unless you get a rally above that, I don't think you can really be confident to say, yes, I'm going to stick and I'm going to go long and stay long, because I think at the moment it's still pretty choppy. I mean, you could even argue that you're sort of trading in a range really in the last sort of week or so on the DAX, with this resistance coming in at 10,382 and the support coming in at sort of 9,930 area. So it is still pretty choppy on the DAX, and I would be rather reticent to take a view either way for any period of time on the DAX. I think it's short, sharp, in and out trading rather than sort of taking a view over a period of days for the DAX. So I think that's the extent of the volatility. So be careful with playing this one. Anyway, I wish you good luck in the trading, and I'll speak to you later. Thank you.